Hello friends, now today we will solve example number 6 on fund flow statement. So this is the example, it is in front of you. Balance sheets are given, two different balance sheets. One is as on 31st March 2018, another is of 31st March 2019. Check out liability side, share capital, general reserve, profit and loss account, provision for tax, sundry creditors, bills payables and bank overdraft. On asset side, goodwill, land and building, plant and machinery, closing stock, sundry debtors, cash and bank, and preliminary expenses. Nothing is there on the account of preliminary expenses. I will just delete it. These are the balance sheets. The total of the balance sheet 4,62,480 and 4,53,880. Now check out additional information. Here is the additional information. Number 1, the assets of another company were purchased for rupees 60,000 payable in fully paid shares of the company. These assets consist of stock rupees 21,640, machinery rupees 18,360 and goodwill rupees 20,000. I will explain this adjustment, but before that we will just check out all the adjustments. Number 2, in addition, sundry purchase of plant and machinery rupees 5,650 was made. Number 3, interim dividend paid rupees 26,000 during the year 2018-19. Next, income tax paid during the year 18-19 rupees 25,000. And now here, this is the new thing, net profit for the year 2018-19 after tax rupees 27,530. So this is the new thing. We will see while solving the example what is the significance of this statement. But before that, first we'll try to understand this additional information number 1. That assets of another company were purchased for rupees 16,000 payable in fully paid equity shares of the company. It means company has purchased some additional assets during the year, and the consideration for these assets were paid by way of shares. How much? 60,000. So here company has purchased the shares. Company has purchased the assets by issuing the shares. Generally, we know that when we purchase the asset, we pay it by way of cash. But here, instead of paying the cash, the shares have been issued. Means company is purchasing some of the assets, say plant and machinery, stock and goodwill. And against that, company is issuing shares. It means during the year, company has issued the shares of rupees 60,000. During the year, company has issued the shares of rupees 60,000. For what purpose? For purchasing various assets. What are those? You can check out. The assets consist of stock. So company has purchased stock worth rupees 21,640. Then company has purchased machinery. Machinery of rupees 18,000. Machinery 18,360. And then company also has purchased goodwill of rupees 20,000. So this is purchased goodwill. Goodwill of rupees 20,000. So we can check out, if you take the total of all these, it must be 60,000. You can check out. The total is 60,000. It means during the year, company has issued the shares of rupees 60,000. But against issuing that shares, what company has received? Stock of rupees 21,640, 18,360 machinery and goodwill rupees 20,000. Normally, we know that when company issue the shares, against those shares, company can get either cash or bank, mostly that bank payment. But here, instead of bank, company is receiving these are the assets. These are assets. Or when we purchase the assets, normally we pay for the assets by way of bank or cash. But here, instead of bank or cash, shares have been issued. So ultimately, what is the significance of these adjustment in for our example? So this is the issue of shares. This is issue of shares means this will appear as a sources of funds. This will be sources of funds. And from this issue of shares, company has purchased this one. So this will become an application. So in our fund flow statement, this issue of shares will appear by rupees 60,000 as a sources. And against that application will be stock purchased, machinery purchased and goodwill purchase. So this is the significance of the adjustment number 1. Now out of that, stock is included in working capital statement. So we will not give the separate treatment for this stock. For machinery and goodwill, it will appear separately on fund flow statement, for which we will write purchase of machinery by shares, purchase of goodwill by shares. And if you can check out in additional information number 2, in addition, sundry purchase of plant rupees 5,650. It means during the year company has purchased the machinery of rupees 18,360 by way of issuing shares. In addition to that, some sundry purchase of plant is also there of rupees 5,650. Obviously, these purchases are against cash payment. So this is the machinery purchased by way shares, and this is machinery purchased by way of cash. So that we will see in our solution. So this is the balance sheet and additional information. Now we have to solve this example. So this is our regular format, fund flow statement. Then second is statement showing change in working capital. Then our working note number 1, funds from operations. Then our other working notes, working note number 2, plant and machinery account. Working note number 3, provision for tax account. Working number 4, land and building account. As in this example, there are 2 different fixed assets. So we'll start solving the example. We'll first complete our statement showing change in working capital. Now you can take the example in front of you. You can check out on the balance sheets in the example. Balance sheet, asset side. These are the 3 different current assets: closing stock, sundry debtors, and cash and bank. Closing stock 2018 1,11,040. So I will write here 1,11,040. Next, debtors are 87,490. So I will write here debtors 87,490. Then cash and bank, you can check out cash and bank rupees 2,500. Nothing is there on account of prepaid expenses, so it will be 0. Check out second year, that is the 31st March 2019. Stock 97,370. Stock is rupees 97,370. Debtors 73,360. Debtors are 73,360. Next, cash and bank 2,700. So cash and bank 2,700. Prepaid expenses are 0. Here we have got our total current assets 2,01,030 and 1,73,430. Now we have to consider current liabilities. Again, go back to your example. This is the example. Check out on liability side. There is provision for tax, sundry creditors, bills payable, and bank overdraft. So out of these 4 current liabilities and provisions, provision for tax, we are going to give the separate treatment in fund flow statement. So this we will not consider as a part of working capital or current liabilities. So in current liabilities, these will be the 3 different items: sundry creditors, bills payables, and bank overdraft. Starting with the sundry creditors, first year, that is the 31st March 2018, 39,500. So creditors 39,500. Bills payable. Bills payable 33,780. So bills payables 33,780. Next is bank overdraft. You can check out bank overdraft. First year only 59,510. 59,510. Okay. Now go to the second year. Check out creditors of the second year. 41,135. So 41,135. Bills payables. Bills payables are 11,525. Bills payables 11,525. Next is a bank overdraft. You can check out bank overdraft is not there in the second year. So bank overdraft 0. Here we have got the total current liabilities. First year 1,32,790. Second year 52,660. Now net working capital, that is a total current assets minus total current liabilities. So for the first year 2018, total current assets 2,01,030 minus total current liabilities 1,32,790. Net working capital is equal to 68,240. For second year, that is 31st March 2019, total current assets 1,73,430 minus total current liabilities 52,660. Net working capital is equal to 1,20,770. We have to find out the change. 1,20,770 minus 68,240. Change is rupees 52,530. So here it is increased. You can check out, here is a increase in working capital by rupees 52,530. First year working capital is 68,240. Second year it is 1,20,770. It means working capital has increased by rupees 52,530. Increase in working capital we will write on our fund flow statement. You can check out increase in working capital where it will appear, that is on application side. So on application side, increase in working capital 52,530. As increase in working capital is there, decrease in working capital will not be there. I will just delete it. Decrease in working capital will not be there. Either there will be the increase or decrease. So our statement showing change in working capital is over. Now we'll go to our working note. Working note number 1, funds from operations. Now you can check out in our example, this is our example, additional information number 5. Net profit for the year 2018-19 after tax rupees 27,530. So this is the net profit after tax is given to us. Means what? If you look at the format of this working note, here first we take change in profit and loss account, then change in reserve, proposed dividend, interim dividend, this we take here, and then we get net profit after tax. But here this amount is directly given to us. So we can directly consider here the net profit after tax by rupees 27,530. 27,530. This is directly given to us, no need to. But only thing is that in this case here, the dividend paid is given, that we will have to consider on fund flow statement, that we will take at the time of adjustments. I hope it is clear. There is no confusion. Every time first we do these things and then we get the amount of net profit after tax. Now here that amount is directly available to us. What next? Provision for tax. So for provision for tax, check out in the balance sheet box. Is it there? So this is our balance sheet. Yes, on liability side it is there. Provision for tax 40,000, 50,000. So it is there. Also, there is some information in the additional information. Check out information number 4. Income tax paid during the year 18-19 rupees 25,000. So amount of tax paid is given. It means amount of provision made during the year shall be missing. That we can find out by preparing working note. We'll go to the working note number 3, provision for tax account. Opening balance 40,000, closing balance 50,000, which I have already recorded. You can cross check it with the example. Provision for tax. First year balance is 40,000, second year balance is 50,000. So opening balance 40,000, closing balance 50,000. Now go to the additional information. Information number 4, income tax paid during the year 18-19 rupees 25,000. Means during the second year, income tax paid by rupees 25,000. Income tax paid. What is the journal entry? That is a provision for tax account debit to bank account. So it means that payment of tax will appear on debit side of provision for tax account. So I will write here 25,000 as a to bank, that is a tax paid. Other than this, no additional information is available for taxation. So we will close this account. The total of debit side 75,000. Is it matched? Obviously not. So I will write here first 75,000. You can check out here there is a difference because total is 75,000 and there is only one item on the credit side, that is opening balance by rupees 40,000. So difference is between these two amount comes to 35,000. And what is this 35,000 missing? That is a provision made for the year. You can check out the balancing amount is provision made for the year, means out of the current year profit, provision made for income tax by rupees 35,000 by passing the accounting entry profit and loss account debit to provision for tax account. Means this much amount has been debited to profit and loss account. Because of that, our profit net of profit after tax has got reduced, and that's why we have to get that again increased. So we know that these are the two figures in red mark. So this we require separately in fund flow statement. First, profit and loss account 35,000. This is provision for the year, which is to be added in while preparing the funds from operations. So I will add here 35,000. Already reference is given of working note number 3. After that, the debit amount to bank. This is the actual payment of tax by rupees 25,000. So this we are going to show separately on fund flow statement as an application of fund. Go to the fund flow statement, check out application side. There is item tax paid, working note number 3. We will write here the amount 25,000. This is over. We are preparing the funds from operations working note. Net profit after tax was directly given to us. Provision for tax, just we have got this amount. Now next is depreciation. Now what about depreciation? Nothing is mentioned. You can check out additional information. Nothing is mentioned about the depreciation, but some other information is given. That is a machinery purchased of rupees 18,360 by way of shares. Machinery purchased by rupees 5,650 by way of cash. It is given. You can check out on asset side. There are the two assets, land and building and plant and machinery. So we will open these two accounts separately so that we can find out whatever is the missing. Mostly there is a missing amount is on account of depreciation. First we will prepare plant and machinery account. You can check out plant and machinery account. Opening balance means first year closing balance 1,12,950. Closing balance 1,16,200. These balances I have already recorded in working note number 2. You can check out. This is our working note number 2. Opening balance plant and machinery 1,12,950 and closing balance 1,16,200. Now, other than opening and closing balance, what we know, just here we have seen this one, that the assets of another company were purchased for rupees 60,000. That company has purchased the assets of another company for rupees 60,000 but which is paid by way of equity shares. This 60,000 consists of stock 21,640 and machinery 18,360. So there is an additional machinery purchased by rupees 18,360, but this additional purchase of machinery is not by way of cash or bank, it is by way of issuing shares. So what will be the accounting entry for this one? That is a machinery account debit to share capital account. So it means machinery account will be debited by rupees 18,360 and it will be credited to share capital account. So there I have written it as a 2 equity shares. This is a real account, debit what comes in. So machinery came in of rupees 18,316, but the corresponding credit has been given to share capital account because it has purchased by issuing shares. So I have written here as a 2 equity shares, but while preparing the fund flow statement, we are going to consider this one as a purchase of new machinery only. Only the thing is that it has purchased by way of issuing shares. Okay. Now, in addition to this, there is adjustment number 2. In addition, sundry purchases of plant of rupees 5,650 was also made. Means in addition to this 18,360, there are the additional purchase of rupees 5,650 and that is by way of cash or bank. So purchase of asset, plant and machinery account debit to bank account. So 5,650. Here credit has been given to bank account. Okay. So this much information is available to us. On debit side, there are the 3 items: opening balance, purchase of new asset by way of bank, purchase of new asset by way of equity shares. On credit side, there is only one item, closing stock. If you take the total, so total of debit side is 1,36,960, but credit side total is 1,16,200. So there is a difference. That difference we have to calculate that difference. Now, what will be that difference? There are the 3 possibilities. One is either depreciation or sale of asset or loss on sale of asset. But in this example, nothing is mentioned about sale of the asset. And also the depreciation amount is also not given. So obviously, reasonable assumption is that the difference between these two amounts is on account of depreciation. That is a reasonable assumption. Even though if somebody assumes that it is a sale of asset, that may not be a wrong, but it is not with the correct assumptions. Your fund flow will get tallied. But obviously we know that these are the depreciable assets. So every year depreciation should have to be accurate. And as no depreciation amount is separately given, so we will consider that difference between these two amounts is on account of depreciation. So here the difference between these two amounts, that is a 1,36,950 minus 1,16,200 comes to, okay, there is already formula is given. That's why there is showing error. We will calculate manually. 1,36,960 minus 1,16,200. That comes to 20,760. And now you can check out this account is tallied. It means during the year, depreciation provided on plant and machinery by rupees 20,760. This we will write on funds from operations. Now you can check out, there are the 3 figures which is in red mark. Depreciation. So depreciation first we will write on funds from operations. So in funds from operations, depreciation plant and machinery 20,760. Okay. Other two bank. This is the purchase of additional plant by way of bank, rupees 5,650. This will directly go to fund flow statement on application side. So I will go to the fund flow statement, application side, purchase of plant and machinery by way of cash 5,650. Okay. Now the next one is purchase of equity, purchase of new machinery by way of issue of shares. So this is purchase by way of shares. That also we are going to record on fund flow statement, because there is a movement of fund. There is no actual movement of your liquid funds, but your share capital has increased, and because of that these assets have increased. So these are the corresponding effects, both effects where we are going to give on fund flow statement. So this is purchase of new machinery, 18,360 by way of shares. So fund flow statement on application side, you can check out purchase of plant and machinery. I have written it in bracket, that is 18,360. 18,360. So this account is over. I hope this is clear. That difference in these balances I have assumed as a depreciation. Suppose in this example, depreciation amount would have been given separately, then obviously difference we would have assumed as a sale of asset. But no depreciation was given, so on priority basis, first we will assume that the difference in the balances is on account of depreciation. Okay, so good. Now next one is depreciation on land and building. We have to find out. So we'll go to working capital, working note number 4, land and building account. Check out the opening balance and closing balance. Go to the example, balance sheet, land and building opening balance 1,48,500, closing balance 1,44,250. So I have written over here 1,48,500 and 1,44,250. As far as land and building are concerned, no information is available in the additional information. You can check out in additional information. There is neither any mention of purchase of land and building, nor sale of land and building, nor depreciation of land and building. You can check out. So only this much information is known to us. If we try to close down this account, debit side total is 1,48,500. Credit side total is 1,44,250. Again, there is a difference. Something is missing on the credit side. So obviously on priority basis, what we will assume that this difference in the balances on account of depreciation. So we'll find out the depreciation. This minus this. Sorry, again it is repeated. Actually, I have given it some formula. This minus this, sorry, no, write the manually, 1,48,500 minus 1,44,250, balance comes to 4,250. You can check out now this balances account is debit. Now here there are the three amounts which are three different amounts, three different items which are marked in the heading depreciation, bank, again bank P&L, but all are the zero. Only one amount, that is the depreciation, we'll have to consider separately in fund flow statement, and that is also in funds from operations. So in funds from operation working note, here we have already considered depreciation on plant and machinery. Now depreciation on land and building rupees 4,250. So depreciation on land and building 4,250. Okay. Now check out goodwill written off. What is there? Goodwill written off. Check out the balance sheet. Is it there? Goodwill written off? Anywhere? No. There is a purchase of goodwill. First year it is 0. Second year it is amount. So there is no goodwill written off. Then check out preliminary expenses. Is it there? Preliminary expenses written off? This is also not given anywhere in the preliminary expenses on balance sheet. Next, loss on sale of asset. We have opened the two different accounts for land and building and plant and machinery. We have not noticed any loss or loss on sale of asset. Any other non-cash expenditure, that is also not given. Just take the total that is given. This has not, I guess, this has not got added. 0, 32, 33, 34, after that 35. So total, you just check out this 4,250 was not there in the formula because only one amount we used to write on depreciation, so that's why this difference is there. You just ignore it. You just take the manual total of all these items. That comes to 87,540. Nothing is to be deducted from this amount. So ultimately, funds from operation comes to 87,540. So this we will write on funds flow statement. Sources side, the first item, funds from operation 87,540. Okay, so this we have written. All working notes are over. Now we have to take our original balance sheet in front of us and we have to check remaining items to find out these remaining amounts. Now take the balance sheet in front of you. These are our balance sheet. Liability side, first item, share capital. First year 2 lakh, second year 2 lakh 60,000. It means equity share capital has increased by rupees 2 lakh 60. It is increased by rupees 60,000. That already we have seen. This has increased because of this one. So during the year, issue of shares by rupees 60,000. Issue of shares is sources of funds. So we have right here issue of shares 60,000. Again, go to the balance sheet. General reserve, profit and loss account, we have considered in funds from operations. Provision for tax. For provision for tax, we have opened a separate account in a working note. Out of this, we have added this as a provision for the year in funds from operation. And this amount we have to write as a tax paid, which we have already recorded in our fund flow statement. That is over. Then sundry creditors, bills, payables, and bank overdraft. It is a part of change in working capital statement. That is also over. Come to the asset side. Now goodwill first year balance is 0. Second year it is a 20,000. Means goodwill has increased by rupees 20,000. This is a purchase goodwill because for this goodwill there is a consideration is paid by way of equity shares. You can check out here. Shares are issued of 60,000. That is for purchasing goodwill also. So this is the purchase goodwill, and purchase goodwill can only are to be recorded in the books of account. So purchase of goodwill is part of application of fund. So application of fund, check out the last item, purchase of goodwill by rupees 20,000. Purchase of goodwill 20,000. Next. For land and building and plant and machinery, we have opened separately the accounts, and from that account already we have considered these amounts: purchase of plant and machinery in cash and purchase of plant and machinery in shares. There is no any purchase or sale from land and building account. After that, closing stock, sundry debtors, cash and bank. These three items are the part of working capital statement which we have already considered. Now just look at the additional information. First additional information is of purchasing the various assets by issuing shares, which we have considered. Second is additional purchase of plant and machinery 5,650. That also we have considered. The third one is interim dividend paid by rupees 26,000, which we have to yet consider. Fourth one, income tax paid, that also we have written. Fifth is a net profit. We have considered it in funds from operations. So only it means now payment of interim dividend by rupees 26,000 we have to show on fund flow statement. So payment of dividend, is it a source or application? Obviously application. So on application side, interim dividend 26,000. It is over. Now we can check out my fund flow statement is a tallied one. Sources side total 1,47,540. Application side total 1,47,540. My fund flow statement is absolutely tallied. It means my exam, my solution is correct. I hope you will understand it. Please go through it, and it is my sincere advice to all of you. Don't only watch the video. While watching the video, solve this example on paper at your end, so that immediately you will can understand it in better way. Thank you very much.